Let's talk with another trader. Scott Bauer is down at the CBO, the CEO of Prosper Trading Academy. Scott, tell me what you're looking at right now. Are you looking at NVDA after the market, or too busy looking at the market as a whole?
Well, yes and yes. And NVDA absolutely is front and center, Oliver. And,
right.
To Alex's point, the market maker moves about 10 and a half bucks or so. There is technically some massive resistance above in this stock. If you look around 162 area, the 50 and the 200-day moving averages are right there. So even if we get good guidance in this stock, from a trading perspective, there is going to be just massive sellers coming in at that point. I'm not saying that the stock can't go above there. Technically, massive sellers there. So much like we talked about last week in Uber, where I want to take advantage of this excessive volatility, which is built in to the option space and option premium, I'm looking to sell an iron condor, which is selling a downside put spread, selling an upside call spread based on that market maker move.
Okay.
So the strikes I'm looking at, Oliver, and this is basically a two-day trade.
Range-bound trade.
At Friday expiration. Yep, two-day trade. Friday expiration. I'm going to sell the 140, 135 put spread to the downside. I'm also going to sell the 157 half, 162 half call spread on the upside. I can get almost 1-to-1 even odds for that. Right now, I think that thing is pricing out about $2.35. I love that trade. The break-evens on that, the break-evens for that on Friday expiration would be 137.65 on the downside and 159.85 on the upside. It does have a slightly bearish bias to it, but I am willing to take that bearish bias because of that technical resistance up above where that 50 and 200-day moving average is. And you know what? The options are reflecting the excess volatility. I want to take advantage of that.
All right, I like this too, Scott, because what you're doing, you've got a pretty sizable range there, which means unless NVIDIA gives a shock number, okay, to your point, it's had a trend on the technicals of lower highs, which the last high was around 157, and then before that 172, all right? So you've got a, really 172, 175 was the last high, so you've got to have some powerful move that gets to there, or it's got to break through a low that it's bounced off a few times around high 130s. So, basically what you're saying is you're probably not going to get a shock number from NVIDIA.
Well, and here's the beauty of this type of trade, is even if we do get a shock number and the stock moves well outside that market maker move and outside of this range, I am totally risk defined in this. I'm selling a $5 wide call spread and a $5 wide put spread. Regardless of what happens to NVIDIA, if the stock went to 0 or 300, doesn't matter. The value of this spread can still only go to $5. If I'm collecting almost $250 for this, that's what puts me at my 1-to-1 reward to risk. I am totally stopped out on my risk. That's why I have to do this. That's why I have to do this. Totally risk defined.
Yeah. All right. And hey, if investors weren't happy after AMD's earnings, similar market and the favorite among the group, supposedly the one taking all the market share, who knows what it says for NVIDIA, but surprises seem to abound for all these companies, AMD, NVIDIA, Marvell, and the like.
Yeah,
so,
for sure.
All right, Scott, really good stuff. Mr. Bauer is the CEO of Prosper Trading Academy. Thank you, Scott. We'll be right back.